What is going on, everyone? Welcome. It is Tuesday, April 21st, 2026. You're watching Trading Trends with John Salama, CMT. Let's get right into it. We got a little bit more of a briefer type of a show here. Let's take a look. Very low volume today, about 40% off of average volume. Let's get into the doc. Non-moving to the upside, but there's always a bull market somewhere. Actually, not really today in terms of massive upside. We will see what's moving to the downside significantly, always tracking more than one sigma movers. And right here, real estate, which has been really doing well, especially some parts. You're looking at REITs versus XLRE versus the basket of home construction, and then the ones that are correlated with Home Depot, Lowe's, things like that. Today, real estate though getting dumped with Chinese internet and gold miners. These are the laggards today. They are not having a good day. We'll take a look at all these charts. Real estate, Chinese internet, and gold miners all falling. New all-time highs for the NASDAQ, QQQ, and IWM small caps. Look at that. Nice breath confirming it's not just tech. Taiwan, of course, a hardware proxy there. We are long that. SMH, we are long that, new all-time highs in SOXX. The portfolio to enjoy this rally. As we said, we've been buying, not in the past day, but before, last week, really, Taiwan, EWT, semis, SMH, and XBI is how we've been playing this. Also Brazil, but it's been not doing a whole lot. Let's get into charts here. And see if there's any calls to make anything of screaming interest, because it is, like I said, a lower volume day. But let's get into it here. Let's jump into the dashboard panel. Where are we? Boom, boom, boom. Homage to corn. All right. Volume today, as I said, really looking at NVIDIA up down 1% here, just on the threshold. Still only 200 though. And that is a point of SMH and SOXX going to new all-time highs. It wouldn't have happened without NVIDIA going over 190. Another thing as well, the April 29th, I believe that is next Wednesday, is a massive day in the markets. I believe it's Microsoft, maybe also Apple, Google, and Amazon all the same day. It's a massive day, I believe. I saw it on the Intel page there. There's usually one day that much of tech reports, and I think Wednesday the 29th is a behemoth day. So let's look at what they're going to say and guide, but it's going to be market shaking. Do pay attention to that. Microsoft, speaking of aforementioned right there, up nearly 2%. AMD, they're loving this one, up 3%. This thing's been up on fire. Trying to challenge Micron for best stock. Not quite, but it is up 32% this year. United Health just rip-roaring now, up 6% this year. Definitely worse places you can be than United Health. Still down 17% since last April when this one really started to fall apart. Amazon up 1%. Apple down 2.5%. Yikes. Tim Cook leaving. They're going to be a new CEO, down 2.5%. They are. Oracle up 3.5%. Marvell up 2%. Google down 1%. And we'll stop there for that. Intraday here. So we peaked early. I know a lot of people are making a big thing on Trump being on CNBC, and everyone's saying last time he was on CNBC, Squawk Box, market ripped like 2%, something like that. Nothing like that really happened here. Here was 9:30 opening bell. He was the TV appearance at 8:30. There's also a number out. And really they chose to sell at each time here. 10:30, there was quite a bit of a flush. We went from 711 to about 707 in just that bar, and we've continued to go lower here. It is now 1:05 p.m. Eastern time, past the the European close, and we are still going lower. We have just actually broke down from I would say a former level. We're going below Friday's open here now at this level and getting oversold. You have some support here. This is shorter term now. 200 bar average here at 700, which is less than 1% away. As I zoom out, more importantly, this rally, let me see here. I'm having small tech diff on this side. Come on, man. Any hooser shashoozer. So right here again, all-time highs was that day, Friday, if you recall, at 712. And then today now you're starting to see, I don't want to really call that a bearish engulfing, but it is swallowing up the previous day. Folks are saying, you know what, let me take my foot off the gas a little bit. And here we are for the time being. We did get overbought though. People love the rally, and there is still a little bit more upside to go. Possibly they chase it. Now it's starting to finally get, like I said, those candles are starting to get a little bit bigger, and they're starting to go to the downside, but still very decent place. That overbought indicator confirmed, this strength. And again, market up basically every day since March 31st, minus the 10th, and that was a scratch, down 7 bips. And yesterday was down 20 bips, and now today. So trees don't grow to the sky. It's been a long time since we said that. Look to potentially a move over the next, 2-3 weeks when they end up letting this go. This should probably get to around the 675 mark, 680. People are going to say, oh my gosh, below the previous all-time high. The sky is falling. The sky is falling. It's not. I think we might even get, like I said, that's within 2% of the 200-day moving average. Are probably going to feel like, here we go again, the straight this and the straight that. But the trend looks great for me. That was a barely 3-week correction, and things look decent here. I have nothing else to really say. And there'll be a pickup if it does get to that marker around the 680. The level I'm looking at are very close to around that, 685 level, 675 to 685, right around there. So I picked the median, the middle level there, and that would be a pickup. Let's see what they are picking up today. There are some things certainly that are on the move, and they are to the downside. Hopefully you can see that screen. All right, let's go. So that's a longer term. Should they continue to chase this, though, last thing on this, and we go higher, this could get to 720 here. I know a lot of people are saying this summer, 7,400 looks like almost an aforementioned, possible or conclusion, rather, by end of summer, like a Labor Day target. And I agree with that. You got to see where the puck is going. Go Flyers, by the way, talking about going where the puck is going. No one had them going up 2-0 in the series. And just like that with the market, right here we are at all-time highs, and FOMO is a very real thing, and there's a lot of cash on the sidelines. And again, don't forget, last thing on this, because I'm going on here. Don't forget all the energy that was being contained here from S&P, honestly, from September of last year, stuck between 650 and 700, all that price discovery for 6 months, just chopping back and forth like a pong ball, bing, 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 bing. And now we go to the upside, and then you get that FOMO and that price discovery, and you're saying there's a floor there. The 200-day moving average is 6,700. They're going north. So that's about it. And so 7,400 looks very realistic. Things are never a straight line, but that does look very realistic for a end of summer estimate. All right, no gainers to the upside today. They are not interested in bidding anything to the upside. To the downside, we have been highlighting this real estate 52-week highs yesterday, and then today, look at that. They're saying no, too much. I know a lot of people are talking about the Kevin Warsh, hearing today. I just pay attention to the charts here. Here is real estate. Finally, very interesting chart. Like to see the buyers take control right here with a 50 RSI. Lots of reasons to get in at this gap April 8th. You didn't have to be suffering in real estate for 12 months. It's okay. Right here on this gap up on the 8th. Just a lot of things working above 50 RSI, gapped up above the 200-day moving average. It was a big day at 1.7%. And that 13-day rally would have got you from view up that day at 42 all the way here. Not a monstrous move in terms of velocity and volatility, but it got to 44.65 yesterday, 52-week high, and now a significant give back, almost a bearish engulfing if the high was really up there, but it gapped lower and then just continued to sell off all day. That 1.7% VWAP today is 44.12, and they said no, thank you. It's hitting lows as we speak, or very close to it. Real estate, I don't love the space right here for the next 2-ish weeks. Going to be obviously rate sensitive. And I think the Fed is, kind of just frozen indefinitely. Look for this to move overall, as I said, for the estimate overall, SPY to move closer to that 685-ish level in the next 2-3 weeks. I expect XLRE to move closer towards around 42.70, which is $1.20 off from here. Over the next 2-3 weeks. I personally wouldn't chase it. That candle today is giving me no reason to. So this is the biggest mover today to the downside in relative terms. Down 1.5% for real estate is a significant, almost 2 sigma move lower. So that is that there on real estate. In terms of trades, I mean, if you really want some shorts, I don't think you're going to get paid possibly, but if you want to sell the 45 calls and you need to short in your book, that's not a horrible way to do it. Don't forget this rally too went from 40 to 44, 10% face ripper basically in 2.5 weeks straight. So it does have to come for air. Maybe collect that premium right there. And then of course, so you can sleep at night, you do a spread. If you're going to sell the 45s for May, you buy, the 46s, let's say, against it. All right. Also, they're liquidating, or not really, liquidating, but it's down even more in terms of percent, but not in terms of absolute, and not in terms of relative, volatility adjusted. Again, we always look at Sigma movers. XLRE, the important part was that is a continuation in terms of a leader, right? 52-week high yesterday. That is strength. They're taking a little bit off the top. Look at this. KWEB, not a leader by any stretch of the imagination. This is your second biggest loser, even though it's down more percent. Down 2.8%. Chinese equities. I know we've been looking at A share and some other strength from FXI and things like that in parts, but KWEB, Chinese internet, no interest. Think of software and then just really the Chinese version of it. You believe it, you don't, and then put that in a blender, and it's just really no faith in this part of the complex. Don't love KWEB here. That was a decent rally here over the 52-week low. This was hitting 52-week lows 3 weeks ago exactly. The level was 27.60. You had a nice ripper again, 10% all the way to 30.5, and now ugly. I would stay away from this space. I think this is headed lower over the next 2 weeks. It looks like it wants to go to about 29 even, so not a ton more, but so we don't want to go out and chase put spreads. But yeah, possibly again, if you're needing some shorts, some global shorts against your emerging markets book, which is a lot of long now in terms of everything's ripping in terms of Poland, Taiwan, a lot of strength, Brazil for the most part. If you need a short here, not an awful way to hedge, sell, these collects and premium, sell 30.5 calls on KWEB. Maybe go out 3 weeks and again, buy against it like the 31.5 so you can sleep at night. But this looks like it's going lower. I think you collect that premium. Like I said, I think this goes down to about $29, possibly $28 if you do get a beta pull overall. The market does pull back, say where we are today at 705 or whatever in SPY, and we do pull back to that 685-ish level. Weak is going to get weaker, and they're going to exit an area like this, which is clearly a death cap bounce. The best it could do was get to the 50-day moving average and then give up the ghost. So that's a sign that's an underperformer. And then now GDX, I just written about this, somewhat correlated. Actually, if you're at the hashtag StockTwit awards on Monday, I will be there as a VIP, actually, because my suggestion was buy silver. You don't have to do it today, but I think the year-over-year leader in ETF land still has meat on the bone on that trade, and it's a great spec in an all-time high market. So this is correlated. They're saying, no, thank you, not yet. And that is fine. One thing I am watching for, of course, is the lower high. Specifically, it's more evident in and very visual in silver. Here, a little bit different. Gold miners really came all the way back, essentially, to their 52-week highs here, struck on March 2nd. Right here, though, not the time. Probably better to wait a couple, I would say 2 weeks. I see a lot of things that have come up very far. So we looked at real estate. I wouldn't really touch it. KWEB, I think, is going lower over the next 2 weeks. I think gold miners as well. Look at this candle, this upside down right here, this Dragonfly Doji, I believe is what it's called. It's absolutely rejection on the April 17th, 4 days ago on Friday. They said, no, thank you. They bid it all the way up to 102. VWAP was 100.70 and it closed 100.3. It hasn't looked back since. It's been going all the way down, and now we're looking at 94 handle, down 5% today. I think this heads, technical difficulties again. You should be seeing my GDX screen. Hang on. GDX, I mean, I don't think it's going to go as low as 81 here. I don't think it's going to question. That was a very dangerously close, the 200-day moving average touch, which it really hasn't done all year. Again, look at this chart. They haven't thinking about selling their gold miners. But we are under 50 RSI, albeit barely. It's at 47 here, but the sellers are in control. Positive take to that region of 88, but I don't think they're going to grab and scoop this up for the next 2 weeks. I don't think this is where the market is. Wait for it to come in. If it does get to 81, I think that's a beautiful setup, to be honest. You do have to take it with a little bit of a grain of salt. But if it falls to 81 in 2-ish weeks time, I would be looking at August or September 99 or 100 calls, something like that. Or maybe if it strips to 81, you'd have less on that bone, so you don't have to go up that far and go that low in delta. I'd probably buy like something like the 90 calls for September, or the stock outright GDX since it moved so much. Today to the downside, down 5%. They are not liking it, hitting lows as we speak. All right, markets near all-time highs. Top 3 games of the past 5 days. There's been really 3 ways to play this aggressively to capture, and software has been the number 1 way, up 10%. The last 5 days, up an average of 2% a day. This chart almost looks exactly like the KWEB one, right? Look, falling off, loser. This thing hit 52-week lows, okay, 11 days ago. So that's wild. And look at this today, very important day. It's the candle we just mentioned from the Chinese internet, the Dragonfly Doji upside down. It's happening today. Yes, we're up 80 bips. And it's the best ETF, but they just showed me today it is not ready for prime time. And prime time is what I'm calling $89 for this ETF IGV. It would have been a new high going back to February 3rd, which precedes the volatility that includes the Iran war. It would have been very, very significant, especially coming off of this low of $74 all the way to 89. They said, no, thank you. This has been an impressive rally off the lows, I will absolutely say. But I don't want to touch this either. I think strength will emerge. Don't forget that April 29th is a massive day for earnings, and they'll affect this. This has been a great rally, green every day since the 13th. Again, the trend has been up 10% in the past 5 days, average of 2% a day. Still doing near that, up 65 bips is pretty strong, but that's an ugly looking candle that is not ready for 89 and hasn't been since February 3rd. That's 2.5 months of a track record there, falling 200 day moving average falling away from me. Another coin reference. That's at 102. Don't like this ETF. I have not tactically sure go for as before for the dead cat bounce. But again, this thing kept falling until just literally 11 days ago. So if you did it in the past 2 weeks, good job. All those people saying, oh, I bought software a couple months ago, you're down. This looks like I don't like this here. I think that 80-ish high above 85 handle is too heavy for it. This looks like to me it wants to get to 82 and then south from there. I think it wants to hang in the 82 to 80 level. Some trades. To me, I like selling. If you need a short in this market, because you got all bulled up and you went a lot longer than you did short. I like the idea of selling the 89. This is an instance of selling the 89 calls, buying the 90. Not sure a ton how you get paid. You could do it, every 2 weeks and roll it. So first one would be like the Cinco de Mayo or whatever that week is, and then you keep rolling it. Otherwise, if you think the puts, it's pretty expensive. You could just buy the 82 puts. I'll look at that, but it's probably pretty expensive. Just one other note, this is 62 RSI though. So there is still a bit of, FOMO and folks reaching into this one once it gives. And again, I think once that's going to be above, $84, I do think you'll start to see this go south and cross under 50 RSI. But tech, software specifically, the best area for the past 5 days, literally a dead cat bounce considering where it's come from. Okay, number 2, is this also a dead cat bounce? Up 6%. So a bit back in alpha, 1% or so a day. It's still doing just roughly that a day. Look at that. Again, very important. We get that candle again. Dragons, the gravestone doji, it's called. Dragonfly is a positive connotation. Fly away. Gravestone, lights out, you're dead. And look at that right here. Very important. Home construction. We said XLRE. Real estate hit 52-week highs yesterday. Beautiful. Strength. Lovely. Take a victory lap. Home construction, a little bit different path here. And now just getting to the 200 moving average. Some really important numbers struck today in ITB. It is up 60 bips. Wonderful. Second best trade in the market over the past week, 1% or so a day. This rally began essentially just coming off of very near the 52-week lows. Not quite, but very close. April 7th. This has been a face ripper essentially the past 2 weeks. Typically, this will relief and consolidate, or correct higher, resolve higher when there's rates relief. Rates go down, home construction goes up. This has been a face ripper, 88 all the way to, and look at this, flat line, almost rising 200 moving average of 102.37. Today it got to 103.19, and they got to come in and say no thank you. Very important. VWAP is 101.46. Right now it's below that. Should this hold, I have no reason but to think this is going to spend the next 2 weeks consolidating, correcting, going lower, probably towards a 95 handle. I would think much of this is given back where these old resistance levels become support here. So $5 to go. I like the idea. It's a little bit of a contrarian in terms of real estate doing so well, but I kind of like the idea of selling these 102 calls. It is real estate. It moves kind of home and construction. It doesn't move amazing velocity here. It's about a 270 ATR, but I think this one's headed lower. Otherwise, you could buy, 95 puts, say July, something like that. I think is also a consideration of a trade. This one looks like it came too far. Do note, though, it is at 63 half RSI, buyers in control above 50, and that looks good and all. But I do think this will come for a breather. Maybe you can also wait for your first negative day. But this right here, this gravestone doji, seen a couple times in the market, We just come too far. It's just gonna have to breathe. And then lastly, the number 3 best way to play the market this week. It was a tie with ITB, ARKG, Kathy Wood's fund. Here she'll be there Monday night at the StockTwits, so I can give her my praises in person on ARK and everything else. 52-week high for ARKG back January 22nd. This is the 3rd best ETF of the week, up almost 1% a day, and this is exactly what I'm talking about. Now it's down 1.5%. So is the trend over here? And I'm going to counter, picture pretty from the lows. I'm going to do it from here again. A face ripper in the past 19 days, $26 all the way to its target, essentially at $32 today. And now you are getting a bearish engulfing. So I'm getting much more, not bearish, but we've come a lot in many parts of the market and areas, especially the more risk on, have to take a little bit of a breather. This looks no different. I think for the next 2 weeks, this will subside to about 20. I think it gets very close to the 200-day moving average, which is also equivalent with its 20-day moving average. Important area of convergence here. I tried to meerkat there. I haven't said that in a while. On April 8th, and then started going right back. And now we have very near its highs. But I think the buck stopped there. Ideas that come out, you could sell the 32 calls. Otherwise, possibly you could buy the 29 puts. I would sell the 28s or something against it. Always do a spread, so you can sleep at night. And it's just worth it. So that is ARKG. So a lot of areas of the market here, looking like to me they've come up a little bit too far, too fast. Nothing wrong with that, but look out for moves lower. Okay, top 3 losers of the past 5 days. Maybe this will give us even more insight. What are they hammering here? The worst spot to be in for the past 5 days. GDX down an average of 1% a day. My goodness. Yes, much of it is coming from today's move. That is just picking up steam today with a 5x the trend move. So that is absolutely, insane. Again, should this hold over the next 2 weeks? I don't think it's in vogue right here. Should this hold $81? Yeah, it'll be a hold your what moment and trade. But I do think the discipline is there, and I still like the chart overall. It's falling out of favor a bit. Do in a risk-controlled way. Do like an 81, 85 spread, something like that, or just outright buy the stock with stops. But GDX, the worst place to be in the past 5 days. GDX down 5.5% today, bucking that trend, defining it, and then some doubling down. Number 2, silver. This was my suggestion. Was buying silver, maybe not immediately, but sometime soon-ish. This looks similar. So the thing that is much more damning in this chart, yes, it's year-over-year leader. Again, how do you get that? The price was $30 last year. It's up more than 2x. Not a lot of funds do that, even though it had a precipitous drop here. Just an amazing loss of a third of value, essentially, on the 30th. Historic. But the peak came on January 29th, 110, essentially, and then boom. It basically got more than 2x away from its 200-day moving average. Silver, again, not in vogue. Should this get to about 50, if you get as close as $56, I would buy it in a controlled way. Again, understand that the RSI is at 48, and they really have not loved it lately. Volume's starting to simmer down a little bit of excitement. You can see it in the chart here. It's not the bowling ball or the ball bouncing off the table entirely, but it does look like enthusiasm fading. I would rather wait for this and buy it in terms of strength on a kind of breakout. And silver had that similar candle as well on Friday the 17th. Very similar. It's up massive. Not massive. It was up 3.3%. View up was 74.02. They closed it below that, very near the lows. And that sentiment, that price action is very hard to defeat. And that's more than a signal. That's very important. It's not noise. It's very important. It kind of determines what's happening for the next week after that. That's flows. That's important. And that's what's happening here. The next day was down 2%. Today it's down 4%. What do you know? Silver, the second worst place to be over the past 5 days, down 3.5%, and much more in today's time frame alone. And lastly, before we get out of here, XLU, they're hammering this one. My goodness, down 1.3%. That is a big move for the Utes. Today, they're down 2.5% over the past 5 days. Don't forget is what we're doing here on a weekly recap. Utilities, I think this is getting very close, actually, to a pickup. I think it did the work already, to be frank with you. Highs for this came at the end of February at nearly $48. We are approaching the lows in RSI. Utility is a very important part of the market. Some people are playing AI through this way, through the generation, the battery demand, and everything else that we'll need for the build out of the data center, so on and so forth, and what have you. This look is going to base soon. If you're lucky enough to get at 44, that's wonderful. I personally like accumulations under 46. This looks like a little bit of a gift, but it's been weak all week, and today they're bleeding it out even further. So see how the close is. VWAP is 45.35, and they've sent it below that on the day. It is very near low of day. Don't forget, I do think this has decent support at 44.5. That would be a far better level for entry. I think this does pop to $46 in the medium to short term over the next 2-3 weeks. So finally, one chart that looks kind of constructive, but needed to wash out a little bit first. So not a lot of upside bullishness I see here. A lot of sitting and waiting and give back I anticipate over the next several days. Could we go a little bit higher first? Absolutely. SPY 720 looks possible. And if it sounds murky, it's because it is. I hope you guys suggested enough derivatives plays there. A lot of selling of upside calls, possibly doing a spread. Top 3 trades of the past 5 days. If you've been long IGV, long ITB, and long ARKG, congratulations. You're absolutely slaying this market. We'll be back hopefully Thursday with another video. Ooh.